Imagine someone handed you $1 million, then gave you exactly one chance to invest it. No second attempt, no undo button. Would you buy gold, Bitcoin, real estate, government bonds, or stocks? Here's the surprising part. One of history's greatest investors believes the answer is much simpler than most people think.
What if I choose the wrong one?
Most people already have.
For more than 60 years, Warren Buffett has done something almost nobody else has managed. He consistently turned ordinary investments into extraordinary wealth. But here's what's fascinating. His greatest lesson isn't about finding secret stocks. It's about avoiding terrible investments.
So, getting rich isn't about finding magic?
No, it's about avoiding expensive mistakes.
Buffett divides almost every investment into just three categories. The first, currency-based investments. The second, unproductive assets. And finally, productive assets. 3 doors, 3 futures. Only one creates lasting wealth.
They all look valuable.
They are not equally powerful.
Money feels safe. Bonds feel safe. Cash feels safe. But there's an invisible thief working every single day. Inflation. You may still own the same amount of money, yet every year it quietly buys less. Imagine carrying water in a bucket with a tiny hole. You don't notice it immediately, but eventually, half the water's gone.
Wait, where did my money go?
I didn't steal it. Time did.
Gold has protected wealth for centuries. Oil powers economies. Wheat feeds nations. They're valuable. But Buffett calls them unproductive assets. Why? Because they never work for you. A gold bar never pays you. It never sends you a dividend. It simply waits, hoping someone else will pay more for it later.
So, I'm waiting for someone else's decision?
Exactly.
Productive assets are different. They don't simply exist, they work. While you sleep, businesses are serving customers, selling products, generating profits, creating value every single day.
This doesn't look like an investment.
That's because you're looking at a business.
Imagine owning an apple tree. Every year it produces more apples. You can eat them, sell them, or plant more trees. Now imagine owning a gold bar. Years later, it's still just a gold bar.
One creates something.
The other simply waits.
That's exactly what buying a stock means. You're not buying a number on a screen. You're buying ownership, however small, in a real business. Every customer, every product sold, every dollar earned works for you too.
So, I'm actually an owner?
Exactly. Not a gambler, an owner.
Here's one of the smartest ways to think about a company. Imagine every business as a black box. You don't need to understand every detail inside. You only need to understand what goes in and what comes out.
I can't see what's happening inside.
You don't have to.
Customers bring money in. Expenses take money out. Taxes, debt, operating costs. Everything passes through the business. But one stream matters more than all the others. Profit. Because profit tells you whether the business is truly creating value.
So profits tell the real story?
They tell you whether the machine is actually working.
Once a business earns a profit, management has 3 choices. They can pay it to shareholders, reinvest it to grow the business, or use it to buy back its own shares. The best companies know exactly when to do each.
So profit doesn't just sit in a bank account?
No, great businesses put every dollar to work.
Some companies choose to share part of their profits with owners. These payments are called dividends. If you own the business pays you, not because you sold your shares, but because you own them.
They're paying me just for owning it?
That's one of the greatest advantages of owning productive assets.
Other companies choose not to pay dividends. Instead, they reinvest every dollar. If management invests wisely, today's profits create even larger profits tomorrow.
So, not paying dividends isn't necessarily bad?
Only if management creates even more value with the money.
Share buybacks confuse many investors. Think of a pizza. Imagine 8 people each own one slice. Now 4 people leave, but the pizza stays exactly the same size. Your slice becomes larger without buying anything else.
So I own more of the company without purchasing more shares?
Exactly.
This is why Buffett spends so much time studying management. Profit alone isn't enough. What matters is what management does with it. Great managers allocate capital wisely. Poor managers destroy shareholder value.
So I'm really investing in people.
You're investing in people who allocate capital.
So, how do you actually recognize a great business? Warren Buffett has spent decades answering exactly that question. Not with formulas, not with predictions, but with a simple way of thinking. Let's call it the Falcon method.
So this is your secret?
It's not a secret, it's a checklist.
First principle, focus. Never invest in something you don't understand. If you can't explain how the business makes money, you shouldn't own it.
There are too many choices.
You only need one you truly understand.
Great businesses have something Buffett calls a moat, a competitive advantage. Something competitors can't easily copy. Strong brands, low costs, customer loyalty, network effects. Without a moat, even good businesses eventually disappear.
So the business needs protection?
Exactly. A castle without defenses never stays valuable.
Next, leadership. The best businesses are led by people you would happily trust with your own money. Integrity first, skill second, because one dishonest manager can destroy decades of hard work.
So character matters?
More than spreadsheets.
Revenue is important. Profit is better, but cash flow is reality. A company can report accounting profits and still run out of cash. Cash keeps the business alive.
So cash is like oxygen?
Exactly. You only notice it when it's missing.
Even the greatest business can become a terrible investment if you pay too much. Price is what you pay. Value is what you get. Patience isn't waiting for any opportunity. It's waiting for the right opportunity at the right price.
So a great company isn't always a great investment?
Price changes everything.
Finding a great investment isn't about excitement, it's about inspection. Every company should pass the same test, not because the future is certain, but because good businesses leave clues.
So every company takes the same exam?
The questions never change, only the answers do.
First, can you explain the business in one sentence? If not, move on. Second, does it have an advantage competitors can't easily copy? Third, would you trust management with your own money? Fourth, does cash consistently flow through the business? Fifth, is the opportunity still growing? Finally, are you paying a reasonable price? Only when the answers are yes, do you continue.
So one failure can stop the investment?
One serious weakness deserves serious attention.
Here's where most investors fail. They think activity creates results. Buffett believes the opposite. You don't need 50 investments. You need a few exceptional ones. Patience is a competitive advantage.
You ignored almost every company.
Because saying no is part of saying yes.
Most people buy stocks. Buffett buys businesses. That single difference changes every decision. The market will always be emotional. Businesses will always create value. The question is no longer, what will the stock do tomorrow? The question becomes, would I be happy owning this business for the next 10 years? Most people believe money creates wealth, but Buffett believes time creates wealth. Money is only the seed. Time is what grows the forest.
So investing isn't really about money?
It's about giving great businesses enough time.
The market will always make noise. There will always be fear. There will always be excitement. Headlines never stop. Successful investors know which voices to ignore.
But what if everyone is selling?
The crowd is often loudest near turning points.
Stocks are only pieces of paper. Businesses change people's lives. Every satisfied customer, every employee, every product, every innovation creates value. That's what investing really means.
So every share represents real people.
And real businesses solving real problems.
Great investors don't predict the future. They prepare for it. They don't chase excitement. They buy wonderful businesses at fair prices and allow time to do the hardest work. That lesson has created more billionaires than any market prediction ever will.